The stock market is in free fall, and it's all because of President Trump's bombshell tariff announcement. Let's get you up to speed. After the closing bell on Wednesday, April 2nd, the White House dropped a seismic policy shift, a 10% across-the-board tariff on all imports, kicking in this Friday, April 5th. But here's where it gets aggressive. Targeted super tariffs on China, the EU, and others take effect just 4 days later on April 9th. And President Trump isn't bluffing. If countries retaliate, he's vowed to hit back even harder. Watch this clip. He's framing it as fairness. Trump says that China charges us 67%, we are charging them 34%. The market's verdict? Instant panic. Futures cratered overnight. The dollar wobbled, and Fed rate cut odds for May nosedived from 81% to 91%. Why? Because tariffs are essentially a tax on consumers, and that spells inflation. But this is just the opening move. The real risks? That's what part 2 is about. The domino effect: inflation, jobs, and global retaliation. Tariffs aren't just about trade, they're economic dynamite. Here's the fallout we're staring down. First, inflation. Analysts warn these tariffs could jump CPI by a full 1%. Gas, groceries, iPhones, all getting pricier. And with the Fed already battling sticky inflation, rate cuts are now off the table for months. Second, jobs. The Fed's own models show tariffs kill more jobs than they create, especially in retail, autos, and tech. And if China, EU retaliate, US farmers and Boeing could lose billions in exports. Worst case, a trade war spiral that tips us into recession, or even stagflation, the nightmare combo of rising prices plus a shrinking economy. But Trump's betting he can force other nations to fold first. Will they? That's the trillion-dollar question. How to trade the chaos. So how do you protect your portfolio? Here's the playbook. 1. Don't panic, sell. Tariff shocks create volatility, but markets adapt. Remember 2018? The S&P dropped 6% during Trump's China trade war, then roared back. 2. Buy the dip but slowly. Dollar cost average into sectors that win in a tariff war: domestic energy, defense, and factories, reshoring jobs. But avoid overexposure to global supply chain victims like tech and autos. 3. Watch the Fed. If inflation spikes further, bonds could crash. Stay nimble. This is high-stakes poker. Trump's betting America's economy can outlast the world's. Whether that's genius or recklessness, we'll know soon enough. Drop a comment. Are you betting on a trade deal or bracing for war?